Hey, this is your Friday Market Minute with Bill. Let's hop right in, take a peek at the rates. Obviously, still since last year, things are things are looking pretty good. Um, we've had a great rally. We're starting to level off a little bit, though, as you can see since last month. A lot of movement up and down as rates are trying to figure out which way they want to go. But we ended on a low note. Same thing since last week. A little bit of movement, but definitely a decidedly down trend here with rates. Or with the MBS, which means that rates are going to be going up a little bit. What's moving everything? It's always headlines and economic data. Definitely a little bit more headlines lately. U.S.-China trade talks. Trump says everything's going great. China says everything's not. Brexit, same thing. One side says we're so close to a deal. Other side says definitely not. So I think a one-word summary of what's driving the rates is probably going to be confusion. And that was evident in our month's view here. A lot of little movements up and down, and that's almost all from, I'd say, more headlines and economic data. Taking a peek at the housing supply, down pretty much across the board since last week. This could be from new houses not coming onto the market, which would mean that people are buying up what's already on there. It could just be that more buyers are flooding into the market as well and snatching up any new supply that's coming on. If you're in that entry level, you're probably going to see a few offers on anything that you're looking at. So that's definitely more of a seller's market. Upper level, you're probably going to be looking at a buyer's market. You can be pretty aggressive with your offers. And that move up level, you're right in the middle. So you might see a few people on a well-priced house. Final thoughts to cap off this week. I think there's a lot to be said for the length and depth of the rally that we saw from November 2018 through July 2019. We have some fantastic rates right now. They've held on since then, even got a little bit better in August, but in general, movement has been minimal. And I think a breakout in one direction or another is likely on the horizon. I will say an alternative hypothesis to all this is that what we saw at the end of 2018 were probably rates that might have been a little bit too high, and we might just be settling into a new normal here of rates bumping back and forth between 375 and 4.25 there. And I think if you lock anywhere close to 4%, you're going to be very happy. You're going to have opportunities to enjoy that 4% as rates bump up to 4.25 or 4.5, and then you're going to have opportunities to lock in and refinance at maybe 375 or 3.5. So again, this was Bill with your Market Minute, and I'll see you next week.